Hello everyone. For this video, I will show you how to present financial statements. Okay, so first is the income statement. So what is income statement? Income statement is a formal statement that shows the performance of the entity for a given period of time. So if you want to know if the company is earning a profit or how much is their income during their operation, so this is the financial statements that you need to see. So here is the format of the income statement. First is the company name, and then under that is the title of financial statements, which is income statement, and then the period ended. And then we will list down the formula of the income statement. First is the revenue, then we will list the expenses to be totaled with income before tax, and then we will deduct the 25% income tax, and we will get the net income after tax. Note that don't forget the dollar sign and the double rule. After that, we will discuss the statements of shareholders' equity. Okay, so what is statements of shareholders' equity? This is a summarize the changes that own or the shareholders' equity. This is the format for statements of shareholders' equity. First is the company name, and then under that, statement of changes in equity or statements of shareholders' equity. Then we list down the formula for these statements. First is shareholders' capital beginning, and then we will add the increase in share capital to be totaled with total share capital. Then we will add the retained earnings beginning and the net income. Then we will get the total changes in shareholders' equity. So, and then the last one is the statement of balance sheet. So, what is balance sheet? So, this is the statement that shows the condition of the entity by listing the assets, liabilities, and shareholders' equity. So, if you want to know condition of an entity or how much is their available cash, how much is their liabilities, and summary of their shareholders' capital, this is the financial statements that you need to see. So, the balance sheet is also known as statement of financial position. So, in preparing balance sheet, here is the format. First is the company name, and then under that, the balance sheet, and then period ended. So then we will list down all the formula. First is the asset, and we will classify it as current assets and non-current assets. So to get the total assets, we will add the current assets and non-current assets. And then the liabilities. We will also classify the liabilities, and just like we did in assets earlier. So to get the total liabilities, we will add the current liabilities and non-current liabilities. And for the shareholders' equity, this is the ending balance of the shareholders' equity in changes in shareholders' equity. So we will add the total liabilities and shareholders' equity to get the total liabilities and shareholders' equity. Note that the total asset should be equal to the total liabilities and shareholders' equity. Is the sample problem, the Happy Company trial balance on December 31, 2020. So first, we will prepare the income statements. So the first line is the company name, which is Happy Company, and then under that, the title of financial statements, which is income statements, and then the period ended, which is December 31, 2020. So we will list down all the formula. First is the service revenue, which is amounted to $1 million. Then we will list all the expenses. First is the salaries expense, which is amounted to $90,500. And then insurance expense, which is $12,000. Rent expense, $24,000. Utilities expense, which is $15,000. Then depreciation expense, $20,000. And advertising expense, which is $45,000. To be totaled with $206,500. Then we will deduct it to service revenue to get the income before tax. And then after that, we will list the income tax expense, which is 25% of income before tax, to get $198,375. So after we will deduct the income tax expense to the income before tax, we will get the net income after tax. Okay, so don't forget the dollar sign and the double rule. So after that, we will prepare the statement of shareholders' equity of Happy Company. Okay, so just like we did earlier, company name, Happy Company, then title of financial statements, which is statement of shareholders' equity in the year ended or the period ended, which is December 31, 2020. So, shareholders' capital beginning, which is amounted to $350,000. Then we will add the increase in share capital, which is $250,000 to get the total share capital, which is $600,000. Then we will add the retained earnings, which is amounted to $227,000. Then add the net income, the balance that we get earlier in income statements, which is amounted to $595,135. With total changes in shareholders' equity, which is amounted to $1,422,125. Okay, so let's proceed to the balance sheets. Okay, so first is the company name, and then the title of financial statements, which is balance sheets, and period ended December 31, 2020. So first, we'll list down all the assets and we will classify them as current and non-current assets. So first in current assets is cash, which is amounted to $250,000. And then accounts receivable, which is $500,000. And Then the insurance, 36,000. Preferred rent, 36,000. And office supplies, 23,500. And then for the non-current assets will be the equipment, which is amounted to $100,000, and then land, $950,000. Then we will deduct the accumulated depreciation of the equipments, which is amounted to $20,000. So to get the total assets, we will add all the current assets and non-current assets. So we totaled with $1,875,500. Okay, so let's proceed to the liabilities. Just like we did in the assets, we will classify the liabilities in current liabilities and non-current liabilities. So first, in current liability with accounts payable, which is amounted to $135,000, and then the income tax payable, $198,375. So for the non-current liabilities is the note payable, which is amounted to $120,000. To get the total liabilities, we will add the current liabilities and non-current liabilities. So for the shareholders' equity, this is the ending balance that we get earlier, which is the amounted to $1,422,125. And the shareholders are the changes of shareholders' equity. So to get the total liabilities and shareholders' equity, we will add the total liabilities and the shareholders' equity. So note that the total assets should be equal to the total liabilities and shareholders.